in Phil Streible, the chief market strategist at Blue Line Futures. He's joining us to take a look at these numbers. Phil, good morning. It looks like kind of a slow trickle out here in terms of all of the data points that are involved in this release here. But I am noticing, first and foremost, GDP quarter over quarter, a little bit higher than expected. They were looking for 2.1. It came in at 2.3, well below last reading of 6.7%. But I'm looking at the PCE prices for the third quarter at 5.3. That was in line with expectations and below that 6.5%. So easing maybe of some of those inflationary concerns with this data point.
Oh, definitely. We're going to continue to see the easing of inflation going into Q1 and especially in Q2. So some of our models and our nowcast models, they're pricing out expectations. You're getting a mix between like disinflation and deflation right around 80% going into the first quarter. So a big slowdown and then an even bigger slowdown. Problem is that the Fed is going to try and tighten going into slowing economic growth. And I really don't see that labor recovery coming back, anytime soon. I think it's going to take a lot longer. And you watch the Fed; they're expecting 3 interest rate hikes next year. Watch that turn into 2, then ultimately 1, and then who knows what happens after there.
So 3, 2, 1, ultimately in terms of the Fed expectations for, and you've got these labor conditions. Which, well, even the back-to-office trade seems to be fizzling out quite rapidly here with these COVID concerns, the new variant. What does this mean for energy products? Crude holding around the $71 level. It did get a little bit of a lift back off those December lows. Maybe a vote of confidence from the president. We mentioned at the top of the show he's rolling out this new plan. They talked about this 10-day isolation period, maybe not necessary anymore. I mean, what does all this mean for crude?
Yeah, you look at the numbers on crude oil, like, current EIA inventories, we're sitting right around 428 million barrels. We burned up 71 million barrels this year, and the 5-year average is 462. So we're way under. So on the numbers front, it looks like we should be a lot higher in those $80 range. But the problem is that, one, you got a big political vendetta against higher oil prices, higher gas prices. They're going to do whatever they can to keep those down. And then with these new COVID cases, and it's a little bit alarming, be honest with you. So there is, these concerns here. So you're seeing, people are not where I have, friends working in Chicago that are supposed to be back in the office. They're not coming back. Yeah. Now that's delayed into next year. So you're going to see oil prices kind of come off. I think going into next week here, I think we'll be back below into the 60s again.
What kind of a role is the dollar going to play in terms of all this? Where do you see further strengthening? Because one of the things that we heard earlier this fall, just a month or so ago, was from Janet Yellen, Secretary Treasury Janet Yellen. She said, look, the COVID is directly tied to the inflation. Ultimately, if we can get COVID under control, we can get inflation under control. But as you mentioned, these numbers are pretty scary right now. Maybe that means that we could expect to see a further stronger dollar continue into the new year, and ultimately impact that it would have on crude, it would weigh on it, you'd think.
Yeah, 100%. I'm on the bull camp on the dollar index. So I like buying in any kind of corrections. You're going to have that hawkishness, coming out of the Fed, which should have some underlying support. And you're going to see over in Europe, euro currency, that it's going to continue to weaken. They recognize that they're behind the curve. However, I think that's going to roll over, continue to weaken, provide an underlying support. The disinflation, really, people start selling off risk assets, and they'll come back and they'll repatriate in a dollar. So that's got that underlying bid.
Phil, do you see the Fed or the ECB being behind the curve as the one headwind for the dollar at this point? Other than that, better than expected economic data here in the U.S., expectations for some of those inflation concerns to continue. Is that, again, could that weigh on it?
I don't think that the dollar is going to have much. We like any kind of correction to be long the dollar. It's really tough to actually get people to speculate in the dollar on the long side because of the fact that they just, look at these headlines. They're trying to pass these bills and everything and really flood them, the economy with a bunch more money. But the reality is that the dollar is got some underlying strength, should continue to go higher.
Let's talk about commodities, not so much the energies anymore, but I want to talk about grains, which spiked, and also metals for the most part, recently actually came off a little bit with the industrials coming off some. Silver, copper hasn't really been. Platinum, palladium's been weakening. What, in terms of some of the other commodities, are you watching as we head into the end of the year?
Oh, just so you know, like on those three metals, platinum, palladium, silver, those are the three worst commodities on the year performance-wise.
Okay.
So it's real unfortunate. I think that they'll get their day in 2022. Those will be like the dogs of the commodities that end up being some of the best performers. The grains, they broke out to the upside. It's unfortunate because it's going to cause food inflation to go up. And it's nothing, that's nothing with politics, really. That's South American weather. They have dryness. It's going to impact their crop yields. The crops are already tight from our problems that we had here. So I like the breakout on the beans. We're going to be looking at, call options futures on that, as well as on the corn market. In addition, gold, I think, looks really good too. For a deflation play, it acts as a placeholder. If Fed starts cutting expectations on interest rate hikes, it's going to get some acceleration upwards. I think Bitcoin had a lot of problems over the last week or two, and it's got people kind of questioning how much volatility they want to be in one of those cryptocurrencies. So I think you go back into, have some gold in the portfolio.
Corn recently getting a nice little lift here, back above $6 here, you can see. And beans, as you mentioned, also looks like if higher today, that could be 7, 8 in a row, back up above 13 here, back above the 50-day moving average recently. And lastly, I wanted to point out wheat also getting a little bit of lift. I liked how you commented on Bitcoin. I saw an interesting story. El Salvador, the first country to make it a currency, ultimately. They bought 21 Bitcoin, I saw, on the 21st of December in 2021 to mark the date. And they've certainly been, a pivotal, important part in terms of it remaining on the headlines, on the news, and on the minds of traders. But you said you expect some weakness into the new year there as well?
Yeah, I mean, on Bitcoin, it's, I think it might be slightly broken. I mean, the $100,000 call, that went out the window. So it's just too volatile for most people. The CME's done a great job by providing smaller size contracts for people to get exposure to. I don't think the ETF really did it any kind of justice at all because of that rollover problem, and it's just a proxy of the futures contract. So I don't see that product doing all that well. You'll see people exit that, goes for more of the pure price play by owning Bitcoin itself. Ethereum looks pretty good to the upside, but again, I'm not a big. I think there's better places to be, especially in the commodities world than those particular cryptos. Talk
to us lastly about the best place to be in terms of the commodities world into the new year, Phil, and then we'll let you get on your day.
Well, I mean, we still like the grains. Coffee market looks like it's going to cycle back up. Lumber's had a heck of a run, but I still like. Gold, I think that bonds are going to actually catch a bid. I think that the yields are not going to go any higher. Okay, you've given us something to keep an eye on, Phil. Always appreciate you joining us and the time you spent with us this year here on the TD Ameritrade Network. Thanks again for that, and have a great holiday. Phil Streible, Chief Market Strategist at Blue Line Futures, joining us this morning.